So I've seen a few things. There is a panic in the diaspora right now. People in the UK, the US, and Dubai are asking the same question. Is Nigeria going to start taxing our income in 2026? I've seen the WhatsApp groups, the Twitter threads, misinformation, and honestly, most of it is not quite accurate. Most of it is quite wrong. So in this video, I'm going to break down exactly what the new Nigerian tax reform means. In plain English, especially if you live abroad and still send money, invest, or own properties in Nigeria. I'm not reading the law at you. I'm explaining what it actually means for your money. All right? So let's get into it. So here's the truth, right? Regarding new laws in Nigeria. Nigeria's tax system has been outdated for decades. Some laws literally come from before independence, if I'm honest with you. And what the government has done with this reform is basically hit the reset button. So starting from January 2026, the entire tax framework will be more modern, more fair, and supposedly more investor friendly. But here's the key part, and where all the panic comes from. They've moved from citizenship-based system to residency-based system. And that's the one change, and that one change is what determines whether the diaspora will have to pay taxes or not. So let me simplify it for you this way. Before now, the lines were blurry. If you earn money abroad but sent it home or owned property back home, the system didn't clearly separate what was Nigerian income and what wasn't. That's where the confusion came about, and sometimes it was abused. Okay. So under the new law, the rule is very clear. If you spend 183 days or more in Nigeria in a year, you are a tax resident. So if you go to Nigeria multiple times and it accumulates to that, this applies to you. If you live abroad and spend less than that in Nigeria, you are not a tax resident, which means your foreign income is not taxable in Nigeria. So if you live and work in Nigeria, Houston or Dubai, your salary, freelancing or business income earned abroad is not taxable in Nigeria. The only income Nigeria can tax is income that's sourced in Nigeria, like rent, dividends from a Nigerian company, or business profits earned locally. And that's it. That's the core rule, right? So it doesn't affect everybody, but it affects some people. We have a client recently, which I'll tell you about, who was recently affected by that, or who will be affected by that. So let's apply this to real life, because that's where people get tripped up. So I give an example. One, a UK-based nurse, you work full-time in the UK, and under PAYE, every month you earn about 200,000 naira home to support. You send that amount home to support the family. The money is not taxable in Nigeria. It's a remit, post-tax to income. Example 2, you've got a US software engineer with property in Lagos. You live in Texas. You own 2 flats in Surulere and earn rent. The rent is Nigerian sourced income. That portion is taxable in Nigeria, but your US salary is completely exempt. And you've got example 3, a Dubai consultant running a side hustle registered in Nigeria. You live in Dubai tax-free, but your business is registered in Nigeria and serving Nigerian clients. The income is taxable in Nigeria because the business operates there. So the rule isn't about where you live, it's about where the money comes from. So here's my honest opinion on this. Take as someone who advises founders, investors, and business owners every week, right? So this is my personal opinion on this. This is a good reform in theory. It's Nigeria's first serious attempt to modernize taxation and align with global standards. For once, the government is acknowledging that you can't just tax people for being Nigerian. You should only be taxed if you actually use the Nigerian system. If your income comes from within the country, then you'll be taxed. It's also smart politically. The diaspora sends over 20 billion home every year. Taxing that would kill trust overnight. So keeping remittance and foreign income tax-free was the right call. I'll say my only concern is the execution of this. A law is only as good as the people implementing it. So the next 12 months are critical. How the FIRS train staff, how banks interpret tax IDs, and how communication happens will determine whether this reform builds trust or chaos. Here's what you should do if you live abroad and have ties in Nigeria. The first thing that I'll do, number one, is to separate your accounts. Keep your remittance and your personal accounts separate from Nigerian business or rental income. Number two, document your income sources. If you're self-employed or send money home regularly, keep clear proof that these funds are from abroad. Payslips, invoices, contracts, or even bank records. Number three, review your business structure. If you run a Nigerian company from abroad, make sure your setup reflects where your real operations are. Number four, stay informed. This law starts in January 2026, but you should actually be preparing right now, not next year, December. And most importantly, don't take random WhatsApp posts as gospel. Go straight to verified updates from the Fiscal Policy and Tax Reform Committee, or speak to a professional who actually understands both sides of the equation. That's the UK, US, and UAE. Look, financial misinformation spreads fast. And if you're a Nigerian abroad, you already have to deal with taxes in one country. The last thing you need is the fear of confusion about another. My goal on this is to channel it simple, to help you make smarter money and tax decisions with clarity and not anxiety. My name is Samuel. I'm the founder of Arthur Hamilton Accountancy, a UK accountancy firm in the heart of London. And I help Nigerians in the UK, US, and UAE manage their finances across borders and stay compliant without losing sleep. Be sure to hit the subscribe button, because next week I'll break down exactly how to structure your Nigerian investments tax-free under the new reforms. I'll see you then. Take care.